What do you do, Kanekis? Welcome back to the channel. I hope you're all doing well. So in this video, we're going to be talking about silver. For a long while now, I've just been talking about gold, but silver is the real asymmetric opportunity here. So we're going to be talking about silver, the historical importance of silver, and when I think silver will start outperforming gold. Before we get into it, please hit the like button, subscribe as well if you're new and you haven't already. Let's get into it. So we're going to start with the gold-silver ratio throughout history. The gold-silver ratio is essentially the price of gold compared to the price of silver. Now you can see historically it has ranged from as low as 1 to 2 to as high as maybe 1 to 15. Today it is 1 to, actually today is 1 to 99. This is an old picture. It says 2024 there. Actually, today it's 1 to 99. You remember in my video about the stock market crash recently, it went to 102. On the Monday, I believe it peaked at 104. Overall, all time, it was 126. That was during COVID. And it is honestly diabolical. I call it diabolical because it is. I'll explain why in just a second. This has been distorted. This gold-silver ratio has been distorted. But before I delve into why, I'm going to give you the fundamentals. So in this video, I'm going to mix fundamentals with technical analysis as well. We're going to start with fundamentals. Now, if you've been on this channel for a while, you would know that I am a Christian. I have uploaded a few shorts talking about the biblical aspects of gold and silver, the importance of them. And this is another one. This is a new passage I'm going to read out. It's from the book of Mark. It's the Good News translation. This is when Jesus fed a crowd of 5,000 people using 5 loaves of bread and 2 fish. So I'm just going to read Mark 6:37 because that's the most relevant chapter to this part. It goes, "You yourselves give them something to eat," Jesus answered. They asked, "Do you want us to go and spend 200 silver coins on bread in order to feed them?" In the footnotes, the important part here is the footnotes. It says a silver coin was the daily wage of a rural worker. A silver coin, we're going to assume they mean an ounce of silver. A silver coin was the daily wage. Silver's price today is $32, approximately 24 pounds. That is not the daily wage, right? So you can already see the distortions. You can already see how silver is massively undervalued. So I went to Gemini. This is Google's AI. I went to Gemini and I asked them, what is the average annual salary in the UK? Break it down by annual, by yearly, monthly, daily, and hourly. And it said this, the average annual salary in the UK before taxes is 25,000. After taxes, 27,000 per year. So this is your take-home pay. This works out to roughly 2,250 pounds per month. 519 pounds per week, 104 pounds per day, 104 pounds per day. Silver should be roughly, historically speaking, 104 pounds per ounce. There's your fundamental analysis. It should be 104. Right now it is 24 pounds. The US annual salary before taxes is $66,622. Take-home pay is $51,000 approximately. And per month, this makes up to $4,250 per month. Per week, $980. Per day, $196. $196 per ounce. Silver is not $196. It is nowhere near, right? And historically, the gold-silver ratio, like I said, was roughly ranging from 2 to 15. Today, gold is about $3,200. If we were to assume a 15 to 1 ratio, a 15 to 1 ratio, that gives us a silver price of about $213, which is very close to the $196 per day for the annual salary in the US. How about it, guys? How about it? Am I doing well so far in terms of fundamental analysis? Let me see the equivalent in the UK. I believe the UK price for gold is it 2,420 divided by 15? 61. Again, very close to the £109 per day. How am I doing so far, guys? Let's keep it going. So on X, by the way, if you aren't following me on X, do be sure to. A lot of these things I post on X before I even make a video about it. So if you want to keep up to date with what I'm thinking, what I'm talking about, do be sure to follow me on X. It is at Kaneki Kojo. So I have to give credit to Miles Franklin for this one. Andy Sheckman, he is the CEO of Miles Franklin. I've talked about them. They are a bullion dealer in the US, highly reputable. And he has often talked about this. So this is a chart of shorts on commodities. A short is basically a way for banks, for hedge funds to tamp down the price. It essentially puts a lid on the price. And once the price goes above that level, they have to cover it, meaning they have to buy it, they have to cover the shorts, and then the price increases quite rapidly. That's called a short squeeze. And now we're going to look at a few commodities here. We're going to look at oil. That's the short on oil. Look at cocoa, right? Look at coffee. Everyone talking about the increase in coffee prices, Starbucks. Those are the shorts on coffee. I'll show you the price action for those two as well. Look at gold. Gold is quite high. Gold is quite high. Then there's platinum. Now look at silver. Look at silver. They are sitting down on silver. They are putting a lot of weight on the price to keep it down. Now, why are they doing that? Well, silver is the Achilles heel of the banking industry. Silver is actually the people's money. This is how they manipulate the prices. This is how they keep wages low. And also silver is used in defense. It is used in missiles. It is used for the warhead in missiles. So the defense sector has a key interest in it. If silver goes up, it is more expensive for them to build their weapons. So once again, silver is very important institutionally. This is actually partly why I invest in silver, because it's a way for me to say F you to the defense industry, actually. Buying silver is a vote for peace. So make it more expensive for them to build weapons. So that's silver. Now let's look at cocoa and coffee. Those are the shorts on them. Look at how much smaller it is on them than silver. So this is the part where we come to the technical analysis. It's the chart of silver, right? The historical chart. It's not doing too badly. As you can see, it's going up and to the right over time. Now I talked about cocoa, right? About the shorts on cocoa. Let's look at cocoa for a second. The price action on cocoa. So you can see, okay, it was capped around $3. I'm not sure. Is it per ton? I think it's per ton. $3 per ton. And then in 2023, it had a massive increase. So that's a percentage of what? If we look at that, that is that's over 200%. 200% in 2 years, right? That is cocoa. Let's look at coffee. Coffee as well. Let's take 2023's increase. That's about 100% increase. Well, close to 200%, right? So coffee and cocoa, with a lower level of shorts on them, are doing massive percentages. Eventually, silver is going to have its time in the sun. So here's the gold-silver ratio. This is what it looks like at the moment. It is sitting at 99. This is the COVID high I was talking about. Roughly 126 right there. The thing about this ratio is it is actually trending up and to the right. So look at the orange line. That's because the central banks are buying gold and not silver. So there is more money flowing into the gold market, but not for long. Eventually, gold is going to become too expensive for the common man to buy, and then they will eventually start buying silver. My antithesis for this, though, is that people are running out of savings. So it's going to be a bit of a while. I talked about when I expect silver to outperform gold. Here it is. So if we invert this ratio and look at it, silver divided by gold, you can see that there is a trend. So I have used these arcs and I've created this channel, and you can see the price has been fixed in this channel since 1998. And when does this channel end? It ends in 2037. Now, guys, 2037 might sound like a very long time away, but it isn't. It isn't. It is only 12 years away. That is what? 3 World Cups? It is not very far. It is not very far, guys. It is going to come sooner than we expect. Or it could even happen earlier. So it could break out like that, making it happen a lot sooner, so 2030. Or the latest, if it keeps up this channel, it could end up being 2037. So that is the timeline I'm using for silver. If you need even more proof on why silver's outperformance is inevitable, here are a few bonus charts. So I'm going to pull up silver versus the British pound money supply. I've talked about the money supply in previous videos, and you can see it's following a trend. It has been on this trend line, this support line, since 2020, and it has just broken out. It's retesting this support. And it hasn't even reached its high. Like, it is very far from the 2011 high in terms of British pounds money supply. And I have a technical target of about 50%. If we look at it in terms of the British CPI, the Consumer Price Index, you can also see it is trending upwards. So this is silver's outperformance of the Consumer Price Index. The CPI, that I've talked about it as well, is a measure of inflation. It is not true inflation. True inflation is inflation of the money supply, the chart I previously showed you. But in terms of this consumer prices, it also shows that silver is in an uptrend and is set to outperform it by 100 or so percent. So this, I mean, hey, listen, the future's looking bright for silver. I'm sitting very pretty. I am not one of those who buys only gold or one of those who buys only silver. I buy both because I think there is a place for both of them. Gold, I don't typically plan to sell gold. Gold is not to be sold. It is insurance. You only sell it if you've seriously fallen on hard times. Silver, I do think silver can be sold as and when needed, when you need liquidity. Also, if you wish to, I also plan to convert some of the silver into gold at some point once the gold silver ratio reverts to mean. So maybe around 1:40. Maybe, I mean, some are forecasting to go as low as 1:7. So it will be happy days for me, and hopefully everyone else who owns silver and buys silver. Honestly, silver is cheap. You can buy silver every month. You can buy an ounce every month. You don't have to be greedy with it. You can buy an ounce every month. It is roughly, like I said, $32, 24 pounds an ounce. However, in the UK, because of VAT, there's an extra 20% on it. So it's roughly 30 pounds an ounce. But it's nothing. It's nothing compared to where it'll go. If you need even more proof in terms of fundamental analysis, I'm going to pull up USDebtClock.org again, and I will show you this. It has a counter. It has a tracker for the dollar to silver price ratio right now. It is $1,000 per ounce. Happy days if that were to come. So, hey, listen, silver, asymmetric opportunity, get in there. I cannot recommend buying silver enough. Buy it alongside gold. If you are starting out early in your financial journey and maybe you aren't earning enough to buy gold, do buy silver. It is a great opportunity. Buy it. So I'm going to end it with this tweet I sent out, I think last month, in April. I said, the Bible is the greatest source of alpha in this market. Why is that? Well, the word gold is mentioned approximately 417 times in the Bible. This is the King James Version. The word silver is mentioned approximately 320 times in the Bible. It is mentioned throughout the book of Proverbs. It is honestly free financial advice in there. So, hey, I hope you enjoyed this one. If you guys did, please hit the like button, subscribe as well if you knew any aren't already. Let me know what you think in the comments below. Are you buying silver? Do you believe in its prospects? Let me know what you think. Please share this video out with people you believe will enjoy it. Share it across social media as well. People do need some financial advice that you typically wouldn't get from financial advisors or typical social media gurus. So I hope you enjoyed it. I'll see you in the next video. Peace.